US crude failed to go past the resistance at $90 and traded with a drop, closed the week at 85. Remember, 84 to 86 is a critical support zone. Now, what is going to happen next week? We will see with the help of charts and indicators. Also, we'll try to see whether the Fed's decision on interest rate will have an impact on markets, or especially crude oil, and how it is going to behave this week. We'll see with the help of charts and indicators. In the end, I will give you the trading levels and strategy for next week. Do watch till the end, do listen to it carefully, and do not forget to like, share, subscribe, and comment. Missing on to subscribe this channel is missing on the profits, as I share my daily analysis on US crude along with natural gas very early in the day with the Asia session. So do watch it, also do press the bell icon. Now see, I told you last week $90 levels you have to watch out for, and only if it sustains above 90 you can consider it as bullish. Since then it has tried to trade it with a drop, in fact has achieved 84 levels. Also remember 84 to 86 is a very strong support zone. Now let's start the day first with the 4-hour charts. Now look at the 4-hour charts, the rise, drop, retracement, achieving the highs, again a drop. So it is again trying to consolidate here within this zone. And yes, if you see it trading below 84 again, you can still remain short, then you can expect 82, and this time $80 levels will be seen there. See, $80 levels it failed to achieve last week. Possibility exists if it continues to trade below 82. We have a lot much there on the downside to cover. Now also look at the 4-hour charts here. It is trying to retrace and consolidate, and once it drops below this zone at 84, it will continue with the momentum which it is gathered earlier with the bearish momentum. Take it till towards 82. See, 82 is the next support zone, and if it trades below 82 we can see a further sharper drop. So this is what we can infer from the 4-hour charts. Also likely on the 4-hour charts you can see the high is there. So this is the channel in which it is trying to trade, precisely situated at the median of this. Now on the upside, the zone at 95, 96, only and only if oil trades above 96 you can consider this as bullish. Also look at this, the $90 levels are now the stronger resistance zone. So 90, 92 is the zone which you should watch, and then 95, 96, only above this you can consider oil as bullish and it may rise. Now look at the daily charts. So look at the daily charts here. This was the sharp bearish slope drop there, and then it changed its gear, and now on the daily charts it is trying to trade within this channel. If you look at this channel, the lows there at $80 levels are going to be a very important support. 78 to 80 zone is a very important support on the downside. If it breaks below 78, there is still lot much to cover on the downside at 76, 72 levels. Be careful there on the downside. On the upside, once it trades above 90, yes, you can certainly expect that 95, 96 is the zone which may provide a very strong resistance. Only above 96 you can consider that it is reversed, and then we can see it rising. This is a trend break, and then we can expect it to rise more further on the uppers towards $100 levels. But whether it is going to happen or whether there is lot much on the downside to cover, let's have a further look on the weekly charts. Now look at the weekly candle here, very important. Now see the last two candles, lower highs, higher lows, and this is in a consolidation phase. Now also look at the body size here. The body size is diminishing. Yes, it is red, but it is diminishing. It can be a probable indication of a reversal. If it trades above $90 levels, that should be considered that it may try to indicate a reversal. Then one can expect 95, 98, in fact $100 levels again on cards. Also remember this fact, if it breaks below these levels here at 84, if it trades below 84 next week, consider that it is going to give you similar size of candle, and this time it is going to give you a sharp red candle which might bring it till towards 78, 76 zone. Remember, I had given this target earlier also last week that if it trades below 80 we can expect 76 levels, and yet again I am telling you, if it drops below 84 next week, go short and stay short, and we are going to look at 80 and 78 and 76 levels. Be careful there on the downside. Now see this. This was the consolidation here earlier since the rally started, and after that sharp rise till towards this zone at 129. And now what about this zone? It is yet to be covered. It is yet to be covered on the downside. Also look at how oil has behaved. Now connect the dots here and connect the dots here. In fact, this time it has achieved further highs. So see how it has behaved, achieving the highs. It tried to drop, sustaining this, again tried to rise, and then the sharp drop has come. Now it is willing to achieve the bottom of this, which is situated at around 75 level. So 76, then 72 levels should come into picture. If it draws below further, we can expect $70 as a very strong support. And yes, we have to be careful of these levels. Yes, it is still bullish on the weekly charts. Achieving these levels, it may again try to bounce back. So be cautious of this. Till the time it trades below 90, you should not achieve or you should not expect a bullish move. Though we can try to get some benefit out of the little rise. And now let's have a look at the monthly candle. See, this is the fourth straight red candle on the monthly charts, and you can find the lows here are yet to be covered. The previous candle itself has changed the slope of it. You can find here, and previously it was trading sharper. Now this is trying to trade with a lesser slope, or lesser, you can say, the bearishness, and it is trying to trade within. That is why the previous candle also confined its movement till 85, and this time it tried to confine its movement till 81. Now yes, there is a probability for it to drop further. How far this can come? It can come back till towards this zone, which is precisely at around 75. This is going to be a very strong support for oil, and the probability for it to drop exists or achieve 75 exists if you see oil trading below 82 next week. Yes, you can go short at 84, expect 82 as the first target, and then below that we may see 80, 78, 76, 75 and 74. Remember this fact, it has still some room for it to drop. Only bullish move is above 90. Above 90, you can still expect 92 and 95 levels to provide a very strong resistance. Yes, we can see it till towards this zone towards the end of the month. Very high probability exists that we may see it achieving sub 80 levels soon. Now let's have a look with the help of indicators, and towards the end I will conclude what can be expected. Now look at the 4-hour charts trading below the median of the Bollinger Bands at the bottom side here. It is trading below the 20-50-100 moving average. The resistance there at 86 is strong. Then 87, which is a very strong resistance. Then 88. Only and only if it trades above 88, you can expect certain bullishness till towards 90, and beyond that it will try to fly a little. Be cautious of 86, 88, 90. On the downside, you can go short at 84. The directional movement is bearish here on the 4-hour charts. Stochastic has seen a high and it is trying to reverse again. Be cautious and alert for this. The MACD is trading in red. It is sub-zero levels and it is trading with little divergence. It is trading bearish. RSI comfortable. And if you look at the daily charts, now look at the daily charts here. Trading below the 20, 50 and 100 period and 200 period moving average, it is trading in a bearish territory till $100 levels. You have got, or the oil has got, a stronger resistance, and probably once it trades past this zone at 88, you may see it flying for 90, 92, and then towards 95 and $100 levels can be seen. Be cautious. Directional movement is bearish here on the daily charts. Stochastic is again looking downwards, and this is a sharp decline which we can see. The slope here and the slope here is different. It is looking vertically downwards. We may see it continuing with this bearish momentum. Look at this. The MACD is again trying to cross over. It tried to trade in green, but again trying to converge crossover for a sell. If it continues to do so, once it draws below 84, the chances for it to achieve 82, $80 levels and sub 80 levels are going to remain high from here. RSI is trading comfortable on the weekly chart. The 200 weeks average is $80. 200 weeks in the sense almost 20 years. So 200 weeks average is at $80 here, and then I'm sorry, 4 years. So 4 years average is here at $80, and then below that there is a support at 75 from the 100 weeks average. That is from last 2 years we have seen oil trading within this zone, that is 70 to 80. On the upside, the resistance there at 94, 92 zone is strong. Then 95 and $100 the ultimate resistance. Look at the directional movement on the weekly charts is bearish still. The stochastic is trading just below the oversold levels, and it is again looking downwards. It may call for another round of drop which may bring it below these levels. The direction, the MACD is trading bearish, and it is trading with the, it has seen the highs or it has seen the extreme bearishness. Now it is trying to trade flat. RSI is looking downwards. It is indicating little more bearishness. And if you look at the monthly charts, on the monthly charts, now here it is, this is the zone 60 to 70 which has got the support levels from 150 200 weeks average, and the 20 weeks average is here at around 20 months average is at around $80 levels. Now 80 is going to remain a very strong support, and I think if it reaches 80 we may see it dropping for 76 75 levels, which is going to be the next support zone. And in fact below 75 it has a tendency for it to achieve the $70 levels. Lot much to cover on the downside, and on the upside if it trades above 90 there is still stronger resistance at 95 90, first at 92, then 95 96, and then at $100 levels. Now look at the monthly charts. Bullishness is getting diminished here. It is trying to converge. Probably we may see a crossover in coming months. The stochastic which was trading overbought here, I have told you I am looking forward to $80 levels. In oil months back I had told you this, that when oil was trading at 120 I told you that it is looking downwards and we may see oil coming back to $80 levels soon. People there were skeptical considering the oil prices, the rising energy demand, but I had told you oil is looking forward to a drop, and see we have achieved $80 levels, $81 levels, and still there is a probability for it to trade bearish. Now it has come back to oversold zone. Reversal from here cannot be so drastic next month, but it may try to sustain these levels for a little while. The MACD, after months movement in green, it is poised for a crossover. See here, it has already crossed over, and now from next month it may continue to diverge. RSI looking downwards. So what we have seen, charts and indicators. Now is the time to give you the trading levels and strategy for next. First let's talk about the levels to go long. Only at 86.55 here you can go long. You can expect that beyond that we may see 88. And yes, before I give further levels and strategy, do remember it is going to remain a wild week, and yes, you have to, whenever you take a trade, you have to shift your stop loss to cost or entry price always. I am emphasizing this with every analysis or any indices, commodities, with every video I am emphasizing this, because first thing is to preserve your capital. Remember, you should trade not to profit but to preserve your capital first, because if you have your capital you can take 1,000 trades, 1 lakh trades, and you can trade for lifetime with the same capital, because you know the art of preserving the capital. Ones who had mastered the art of preserving the capital can only increase the capital and wealth, because today it may be 100 trades with 0 profit, tomorrow it is going to be 100 trades with $1 profit. So you are earning $100 and a confidence worth billions of dollars. And once 100 trades of profit are there, definitely you will take another 100 trades with more bigger profits and more higher confidence. So there is no where you can learn the art of gaining confidence in training. Yes, only place where you learn the art of identifying the right trades at the right times and the right exits is joining my mentorship batch. The 15 days session will definitely help you understand the markets better and definitely help you become a profitable trader. My next batch, that is 16th batch, is starting on 3rd of October. Be a part of it. 90 minutes daily, lifetime support is what you get. Do not miss to join this. So beyond 88, you can expect that oil will try to hit 89.2. This is going to be good resistance, and then $90 levels. See, this is going to be a very good strong resistance zone, and if it breaks past this, you can expect 92 as the next target, 93.5, 95, 96, and then 98 and 100. I am giving in round figures for now, but yes, these are the levels which are going to provide a very strong resistance. I don't expect though that it is going to rise. I am looking forward to a drop, but these markets are beyond me. Mark these words, markets are beyond me. What I expect, what you expect hardly matters to anyone. The direction is that you have to trade as per the levels and do not miss these levels. Below 83.9, go short here. The nearest resistance is 83.5, and then I will look forward to 82, and then it may try to hit 80.2. Once it achieves 80.2, we can look forward to 79.2 and 78. In fact, below this, we can look forward to 76.5, 75 and 74. Probability of it to drop exists some point of time in near future. It has to achieve these levels before it looks forward to a rise. In fact, it can see 72, 70 levels also in coming weeks and months. Be cautious of this. We can expect little drop if it continues to trade below 82. Remember, these levels and these levels below 84, yes, probability of a drop increases. Below 82, it is going to remain bearish, and then it will try to see below 80 levels. In fact, 78, 76, 75 cannot be denied. Only it is hardly, you can see 85 to 86.5, 76.5 is hardly $10, a 10 percentage drop. And yes, it can, these are volatile days. It can cover in a day, it can cover in a month. It all depends on the volatility there, but this is going to be certainly volatile for a little while. Be cautious on the downside. On the upside, be cautious of $90 levels and then 95 levels. These two levels you should definitely be alert of. Take your trades accordingly, take your positions accordingly. Do not forget to like, share, subscribe and comment. Thank you. Have a great profitable trading week ahead. Thank you.